Stocks continue to rally on Wall Street. The S&P 500 and the Nasdaq close at record highs ahead of the numbers from Nvidia, which are expected later today. The market also awaits minutes from the FOMC meeting. Stocks in the Asia-Pacific trade mixed despite a bullish handover from Wall Street. The GIFT Nifty is also implying a positive start for the Indian markets. Crude prices continue to drift lower. Brent slips below $83 a barrel as geopolitical worries subside. Gold prices hold near record highs while aluminum hits a two-year high. In key earnings to track today, U.S. sales are likely to drive Sun Pharma's earnings in the fourth quarter, while margins may come under pressure. Also watch for earnings from Grasim and Power Grid Corporation. And market regulator SEBI announces a new framework for considering the unaffected price of transactions following the confirmation of market rumors. The framework will come into effect for the top 100 listed companies from the 1st of June. The regulator has also proposed a tweak in norms governing share buybacks and merchant bankers to facilitate the ease of doing business. Good morning. You're watching Power Breakfast on CNBC TV 18 this Wednesday morning in the Mumbai News Center. I am Hormuz Fatakia. Let's first take a look at how the Asian markets are faring. It's a slightly mixed start across the Asia Pacific. The benchmark indices have opened in a mixed fashion. The Hang Seng is down 0.3%. The Taiwanese index is trading with a positive bias with gains of around 0.5% there. The Japanese indices are trading lower because of the trade data that was reported for the month of April, and the economy has slipped back into deficit mode there for Japan. The trade gap there widened to almost $3 billion for the month of April, and Singapore's markets are shut for a public holiday today. So a mixed picture there across the Asia Pacific. Exports as well for Japan have grown lesser than expected. So it's a mixed start on the Asian screen, but the GIFT Nifty pulled that up as well, and that is indicating a slightly positive start, flat to positive for our own markets. The implied open suggesting a 25-point uptick at the start of trade. Remember, the Nifty has been consolidating. It's gaining for 4 straight days, so a 5th straight day of positive start likely for our own markets. But from Asia, we move across to Wall Street now. The Dow Jones, it was a positive handover there as well. The Dow Jones gained nearly 70 points. The S&P 500 ended with a positive bias as well. The tech-heavy Nasdaq gained around 40 points last night, when both the S&P 500 and the Nasdaq closed at new record highs. Now, investors will track the AI favorite Nvidia's first quarter results and the FOMC's April meeting minutes, which are due later today. CNBC's Pippa Stevens gets us a wrap of all the action on Wall Street.
Markets are relatively flat Tuesday, hanging on to record levels seen in the previous session as investors wait for quarterly results from artificial intelligence favorite Nvidia on Wednesday. The Dow up 66 points. The S&P 500 saw another record close after gaining 13 points, and the tech-heavy Nasdaq added 38 points, also closing at a fresh record. Layoffs hit Disney's Pixar studios on Tuesday. A spokesperson told CNBC the animated film arm of Disney plans to cut 175 jobs, or around 14% of the studio's workforce. Layoffs hit other Disney businesses last year, but Pixar's cuts were delayed because of production schedules. Initial reports suggested Pixar might cut as much as 20% of its workforce. The cuts are part of Disney's CEO Bob Iger's mandate to focus on the quality of the media giant's content rather than the quantity. And they come as Disney struggles to make a splash at the box office. And the Biden administration plans to release 1 million barrels of gas from a Northeast reserve in a push to lower gas prices this summer. The Energy Department says it will strategically release the fuel between Memorial Day and July 4th so that the gasoline can flow into local stations in the Northeast during the busy travel season. Gas prices are currently sitting around $3.60 per gallon, according to AAA estimates. Rising energy prices sparked speculation in April that the president might tap the reserve ahead of the November election. That's what's happening here in the U.S. Back to you in Mumbai.
Now, Christopher Waller, an important voice from the U.S. Federal Reserve, sat down with CNBC's Steve Leisman to discuss the trajectory of the inflation policy, restrictiveness, and whether the Fed will cut rates anytime soon. Listen into excerpts from that conversation.
The inflation numbers are kind of they're kind of middling around the 0.3 monthly numbers. That's why I was joking this morning. The second digit seems to be a big deal, whether it's above 0.3 or below 0.3. But I think it will. Whatever we saw happen, we're going to see policy start to put more downward pressure on demand. We're seeing it through the labor market. We're starting to see it in surveys of manufacturing, non-manufacturing, things I mentioned this morning. So I think keeping the policy rate where it is, it's restrictive. That'll continue to sort of slowly grind down the economy, but not throw it off a cliff. I would say that the data is not looking like we need to raise rates. So, like I said this morning, you never say never as a central banker, but I don't think we're going to need to raise rates. So that means either hold rates steady for longer, rate cuts get pushed out, and if the data were to continue softening throughout the next 3 to 5 months, you could even think about doing it at the end of this year.
Let's now listen in to two very important voices now. First up, Citi's chief U.S. economist argues that the Fed could cut rates in July and also advocates for a possible hard landing. He explains why.
I think there are two ways we can get to the July cut. We can get to the July cut on a hard landing and a weakening in the activity data. We also might still be able to get to July on slower inflation, and I think that's part of what the market is reacting to with Governor Waller's comments. Yes, he's looking for several more good inflation prints. Will we have enough by July? That might be on the edge for him. Is Powell a little more dovish than that? That's what we have to wait and see. On the hard landing there, what we're really looking at is what's going on in the labor market. That's what's most convincing to us, where we're seeing a weakening.
And let us now listen in to what Jefferies' David Zervos made of Governor Waller's comments and assess the Fed's rate path.
I think the Fed's gone out of its way to really cut that tail off to rate hikes. Jay did it in the press conference. We're now seeing Chris do it, and others are really pushing that way. So I think it's the mantra here, and what I hear everywhere is, look, we can just hang out a little bit longer at what we think is restrictive policy, and that should give it time to have some of those housing-related effects and other OER-related effects in the CPI take effect, and give them the direction for the CPI that they want. I think they were encouraged by the last inflation report. And he did, it's not an unequivocally bullish story. He's still saying several, which is probably 3 more inflation readings before he's comfortable. So barring any major catastrophe on the labor side, I think the summer we kind of shut the door on the Fed and we revisit it right around election time or after election time.
And that's all the global market action. But how will all of these overnight cues impact our own markets? We have our research team joining in with the trade setup and the stocks that are likely to be in the news and the F&O cues as well. Good morning to everyone. Sudarshan, first up, let's get you the trade setup for the day. The market internals seem to be a little worrying.
That's correct. So good morning, Harma. So, well, the overall trend, whether we talk about the global market or domestic market, it's looking mixed. And especially on domestic front, market seems nervous ahead of election results on June 4. And more than indices, it's reflecting stock levels. On Tuesday, we saw a mixed close for frontline indices with Nifty and mid-cap index closing in the green, while Nifty Bank ended with minor cuts. So why do I say market is looking nervous? Look at some of the internals, starting with biggest weighted sector, financials, that continues to underperform benchmarks. Market breadth continues to favor declines despite mid-cap outperformance and with index being at record high. And it's because the outperformance is due to stock-specific move because of the current ongoing earnings. And lastly, in this, look at the volatility over the last few days, and it's reflecting in the India VIX move. India VIX has moved to highest levels in last 2 years. And shifting to global cues, again, on equity front, there is not much move. It was a flat close for all 3 major US indices, but focus remains on commodities. Crude has slipped overnight. Brent is back to lowest levels in last 2 months, and it's hovering around $82 a barrel. Gold remains above $2,400, and aluminium has hit highest levels in last 2 years. And factoring all this, GIFT Nifty for today is indicating a subdued start for our market. In the cues to watch on global front, we have FOMC meeting minutes and crude oil inventories. And on domestic front, in the last leg of earnings, we have today 3 Nifty companies that will be reporting results, and those are Sun Pharma, Grasim, and Power Grid.
Indeed. Thanks a lot, Sudarshan, for joining in with the trade setup for the day. Over to Vamakshi now, who would list out the stocks that you need to watch out for. Vamakshi, good morning.
Well, good morning, Hormaz. A lot of counters in focus today on the back of their earnings. BHEL has reported a miss as compared to Bloomberg estimates. Revenue has missed the estimates by 7%. The margins have also come in at 8.8%, which is much lower than what the street was anticipating. In fact, it is down nearly 400 basis points YOY, and this is mainly on account of a spike in the other expenses. But nevertheless, the commentary that came through from the management was quite strong, and the order book looks quite healthy for this counter. Metropolis reported numbers, especially revenue and margins, which were above the street's expectations. The core business revenue saw an uptick of 15%, but Ameera Shah has stepped down as the MD of the company, which could weigh in on the sentiment for the stock. PI Industries reported a revenue growth of almost 11.2%. Operating margins came in much better at 25.4%, and the net profits saw an uptick of almost 32%. But the year-on-year growth is now slowing down, and in fact, the company has reported a decline on a sequential basis. VA Techwabag has reported operationally good quarter with margins improving to 12.4%. The company has also reported a net profit of 78 crores as compared to a loss of 112 crores in the same quarter last year. They've also given revenue growth guidance of almost 15 to 20% CAGR over the next couple of years. Ircon has reported a beat as compared to estimates. Revenue is down by 1%. They've reported margin at 8.4%, but the net profit has declined by 4%. Apollo Tyres will be another counter that we will be watching out for, but not on the back of earnings, because source-based information suggests that blocks for sale of up to almost 3.5% equity is now launched. Warburg Pincus's subsidiary White Iris may sell its entire stake. GR Infra Projects has emerged as the L1 bidder for two projects worth almost 4,346 crores of MSRDC. PNC Infra has also been declared as a L1 bidder for two EPC road projects worth almost 5,000 crores from the same entity. And lastly, let's also focus in on United Spirits. This counter will be in focus because they have received a notice to pay water charges arrears of almost 345 crores from Water Resources Department, Maharashtra.
It's a long list. We'll keep an eye out on all of these names. Vamakshi, thanks a lot for that. And lastly, Nigel joins in with cues from the FNO space. Nigel, good morning. The Nifty is respecting the 200-point range now. What's the setup looking like?
Well, I think today the big factor, Hormuz, is going to be the Nifty Bank. That's going to swing trade in today's trading session. I'll get to that in just a bit. What did the FIs do yesterday? Well, a bit of a rarity. They added more longs than shorts. In fact, they added 20,000 long contracts. They unwound close around 13,000 short contracts, which brings the short positioning now down to around 68%. Even if you're looking at it in absolute number, it was at around 2.5 lakh contracts, which we have been telling you. Now that number has come to around 2.1 lakh contracts. Still net short, but not as aggressive as what we saw, say, 4-5 sessions or so ago. If you want to equate that number with regard to the old lot size, it'll still be close to around 1 lakh contracts odd. What about the options data? Well, the Nifty options data is suggesting in the near term, that's just till tomorrow's contract, we're bracing for a bit of a range of closer around 300 points. I say that because the 22,600 call, 22,400 put, both of them saw a fair bit of action. So going by their options data, the levels come up for you on the screen, 22,325 on the downside, on the upside around 22,650 approximately. So, that's the broad range. You're looking at 325 points. And I say the 22,300 mark is very important, because in that vicinity, you have the 20 and the 50 DMA. So the 22,300, that's the first level that, the bulls want to defend in case we do see a bit of a dip. But as I said, the big swing factor for today will be the Nifty Bank. It plays out the weekly expiry today. Yesterday, it was a bit of an underperformer, and it wants to get past that 20 DMA. So that's going to be crucial. My guess is today, one of those two levels, either the 50 or the 20 DMA get taken out, and that's what will give direction to the Nifty as well. Back to you.
Being an underperformer, the Nifty Bank, we'll keep an eye out on that. Thanks a lot, Nigel, for the FNO setup this morning. Time for a short break. Up next, we get you all the details on the new framework for considering the unaffected price of transactions following the confirmation of market rumors. Stay tuned. Back on the other side. Welcome back to Power Breakfast. Let's get you some developments on the regulatory front now. The Securities and Exchange Board of India announced a new framework for considering the unaffected price of transactions following the confirmation of market rumors. The framework will come into effect for the top 100 listed companies from the 1st of June. Listed entities are required to verify market rumors when there is a significant price movement. The stock exchanges will publish the framework for identifying material price movements on their website. Now, according to the new framework, if a rumor is confirmed within 24 hours of a material price movement, the unaffected price will be calculated by excluding the price impact of the rumor and its confirmation. In other measures, the SEBI has also proposed tweaking norms governing the buyback of shares, merchant bankers and bankers to an issue. Over to politics now, and Congress leader Jairam Ramesh has promised policy stability, simpler tax structure and jobs-linked incentives for manufacturing along with a PLI if the opposition alliance is voted to power. In an exclusive conversation with my colleague Parikshit Luthra, he also promised to continue with the disinvestment and increase competition by privatizing state-run companies.
The corporate tax rates were reduced, but private investment has not boomed. There's no buoyancy in private investment. It's still stagnating at about 27 or 28% of GDP. And why are businessmen now going and seeking citizenship of Dubai and Singapore and other countries of the world? They should be investing in this country, no? We have to have a predictable tax regime. One of the reasons why, Keynes once said that investment is not just a financial decision. Investment is a psychological decision. And today the psychology in India is one of fear, is one of distrust, is one of suspicion. His extraordinary statement that the Prime Minister made a few days ago that, Adani and Ambani are going in a tempo with gunny bags of black money and giving it to the Congress party. I thought black money had been unearthed and eradicated after the demonetization exercise of November 8, 2016. And Prime Minister is speaking of black money in the hands of two of the biggest industrialists of India. Extraordinary situation. We are for competition. We need more competition. We need more genuine competition. We can't have oligopolies and monopolies in our industrial system. Competition, competition and more competition. We must reduce barriers to entry. We must reduce barriers to exit while protecting the legitimate interests of all stakeholders, particularly labor. We can't have an insolvency and bankruptcy code, which has haircuts to the extent of 80%, 90%, as we have seen in a large number of cases. We are for competition. There will be a public sector in strategic sectors of the economy, certain strategic sectors of the economy. Public sector will be there. But we know that we cannot accelerate GDP growth. We cannot transit to an 8%, 9% rate of economic growth without strong, buoyant, expanding private investment.
Jairam Ramesh there in conversation with Parikshit Luthra. Time for a short break. Up next, we get you cues from the commodity space. Stay tuned. We'll be right back. Back with us on Power Breakfast, and as promised, Manisha Gupta now joins in with all the updates from the commodity space. Manisha, good morning. Commodities have been on a tear over the last month. What are you picking up this morning?
Morning, Hormuz. Well, yes, I'm starting with the metal space because copper prices still are trading at an all-time highs. There is fresh mine supply lows and long-term demand estimates still on the higher side. And with China moving to ensure that there are no more unsold housing inventories, they're also trying to limit defaults for the distressed developers. Well, that really seems to be supporting copper prices. So we are still around that 5.15, an all-time high that we've seen on CME in last couple of days there. But the laggard clearly have been the other metals, but aluminum seems to be catching up fast because we've seen 5% of gains in the overnight market. The prices now are trading at a 2-year highs. The reason for aluminum run-up has been Rio Tinto declaring a force majeure on alumina cargoes from Australia refineries. That is because there is gas shortage at Australia refineries. Not just Australia, but China, Yunnan also, because of the hydroelectric power shortages, is looking at lower smelting in sense of aluminum, and that is keeping the prices on the higher side. Well, it continues to be strong for gold and silver. The only thing that I see negative on the screen right now is the crude oil prices, and that also because of unexpected buildup in the U.S. inventories. But apart from that, well, yes, almost all commodities trading yet again in positive in Asia right now.
It's almost become a trend now, almost all commodities trading positive. Manisha, thanks a lot for that. Now, Helena Croft, the global head of commodity markets at RBC Capital, gives us a glimpse into the range-bound cycle seen in the oil markets recently. Listen in.
Diesel looks soft, but gasoline looks relatively strong. And so I just don't think there's a lot of conviction right now in the market. What I will say is we've basically lost all the geopolitical risk premium that had been driving prices higher. And after we had that Israel-Iran exchange of fire, I think a lot of people were saying, I don't need to worry about the Middle East anymore. I mean, the war continues, but I'm not worried about geopolitically driven supply disruptions. And even over the weekend, we had that helicopter crash, the death of the Iranian president. There was no international dimension to that. So people see this all as a very local story right now for the Middle East with no real energy implications.
Moving on now, investigation is being carried out after a 73-year-old British passenger died and 30 others were injured as a Singapore Airlines flight was hit with severe turbulence en route yesterday. The flight had 211 passengers and 18 crew members on board. The flight made an emergency landing in Bangkok and the injured passengers were taken to hospitals for treatment. The authorities have said that all possible assistance is being given to the passengers and the crew members, both at the airport and hospitals. The CEO of Singapore Airlines also expressed his condolences to the family of the deceased and apologized to all those who were affected in the incident. Listen in.
We are deeply saddened by this incident. It has resulted in one confirmed fatality and multiple injuries. On behalf of Singapore Airlines, I would like to express my deepest condolences to the family and loved ones of the deceased. We are very sorry for the traumatic experience that everyone on board SQ321 went through. Our priority is to render all possible assistance to our passengers and crew members. We are fully cooperating with the relevant authorities on the investigations. We will provide updates through our social media channels as more information becomes available.
And with that, it's time on this edition of Power Breakfast from me and the team that put this show together. Thank you so much for watching. Bazaar Morning Call takes the action forward.